And the broadcast is live. It comes up on the screen. Phil Tarrant, Tom Panos, Real Estate Exposed. Sydney, Byron Bay, Adelaide, Melbourne, Darwin. We've been right across this great nation, Tom, this year so far. And where else it will take us, I don't know. But there was a lot of feedback come through. I said that I would do a ride-along with Tom Panos for a day and go behind the scenes of auctioneer extraordinaire to see what actually makes him tick. What you see on screen, is that fabricated? Does he put it on just when he wants to, or is he really like that every day? That's what the punters are asking, Tom. I think we need to do this.
The number one, Phil, let's do it. I want you to come with me from morning to afternoon, a day of, let's pick a day that's got, say, half a dozen to a dozen auctions. And I want to get you to listen to the conversations behind closed doors, what is basically said. Like if you ever wanted to create a real reality TV show on real estate, it would be raw, authentic footage in conversations with a vendor just before the property goes to auction, raw, authentic footage with a buyer in negotiations. And I've got to say to you, Phil, emotions are high. The most common thing a vendor says to me in the current market at an auction is this: we don't have to sell. It's the most common thing, right? But we don't have to sell, Tom, right? Very predictable, because a lot of people feel are not getting the prices that they were previously getting. And when you look at them and say, what do you want to do? They say, but we don't have to sell. We'll keep it, which is actually quite profound, Phil, because what you don't want to be hearing in the Australian market is we have to sell. We're desperate. And there is no distressed sales showing up. I mean, I can't remember a distressed sale this year. Haven't had one.
Well, I think that's what to the Reserve Bank Governor and Deputy Governor been talking about, the strength of family balance sheets and the fact that they can hold the line and not have to sell. But Tom, I reckon the Tom Panos front-facing persona is very different to the considered man behind the scenes, driving in his car from auction to auction. Very conservative. I reckon it's a myth. Tom Panos is a myth. What you see on screen is not the real Tom Panos. I want to uncover this because I don't believe it.
The first thing people say when they meet me in real life that have only been seen virtually, you won't believe this one, Phil. Oh, you're a lot taller than what we thought. Everyone says the same thing. And in fact, I went to the Ray White Connect conference on Monday and Tuesday this week on the Gold Coast, and there was 3,000 people in a room. Now, that's a large group of people. And I actually said to myself, this was my real COVID test. So I've copped COVID twice, and I thought, if I'm getting it a third time, I'm going to have a serious crack at it with 3,000 people in a room, right? And it's now 3 days later. I haven't got it. So that's a positive sign. But Phil, that's the first thing people say. Oh, Tom, you're a lot taller in real life. And I think it's because I'm sitting down. I don't know what the reason is, Phil. I mean, you've met me, so you know me. That wouldn't go through your thought. That's the first thing. And then the second thing people say, Phil, in real life, after spending some time with me, you're not a bad guy after all. You're a lot nicer than I thought. I mean, I think a lot of real estate agents have got a view that I'm going to scream at them and actually sort of be pretty myopic in my approach. But I'm not. I actually think I'm a really nice person. I think that sometimes when you tell the truth and you don't do it in a soft way, you can come across as a bad person. But as they say, man, I might hurt you with the truth, but I'll never comfort you with a lie. Very important. Very important.
Well, there you've got it. And yeah, I reckon you're probably pretty good there, Tom. Spot on. What's Peter saying there, mate? I missed that.
Oh, Peter. But they know that there are buyers to buy the property at a fair market price, right? Well, look, Peter's brought this up. I did an auction. I did an auction for him on Saturday, right? And I want to show you. Hey, this is a really good point, Phil. I want to show you. We had two properties. One sold at auction and one didn't sell. And there was a buyer at the second property who I know, my 35 years of experience, Phil, says to me, he wants it. that he was playing hardball. At the end of it, I want you to listen to the conversation. I said to him, matey, it's not going to happen. But I want to let you know, I want to thank you. Because of your offer and your negotiations, you've helped us get the vendor down from a dream price to a reality price. And I want to thank you because this property is going to get sold in the next few days because of your offers. The buyer stared at me and said, so what are you saying? That because of us, you're now going to sell the property to someone else? And I said, well, the truth is, low offers, they become realistic. No offers, they haven't no feedback. Your offers helped us. And then the conversation moved on and he said, well, will you be able to call me if you get another offer? And my response was, would it really make a difference when you've told me you're not prepared to go up any further? Good point, isn't it?
Great point.
And
What
then,
do they respond to it? No. Just let me know. I might be able to change my offer. That's probably what they said.
More or less said, no, we just want to be kept in the loop. And I said, here's the deal. We're not going to go get another offer, shop it around, then get your offer and shop it around, because that's going to create a Dutch auction. I'd be far more inclined to ask you to tell me what your last and final offer is now. So that way we can walk away knowing that we're not underselling it to someone, and at the same time you can bring closure. Now, that sale didn't come together, but I'm pleased to let you know, Phil, that Peter Toff said to me 2 days later, he sold it for about 200 grand more to another buyer, which is one of the reasons I'm urging every agent at the moment, Phil, to use and consider using the auction system. Because even though they're not selling at auction, Phil, what you find is an auction gets reality and helps a vendor accept, hey, this is as good as I'm going to get. So what you've normally find is a few days later, the property gets sold. So auctions to me, you should be running to them, not running away from them. And Phil, the headline that we've got on this stream that we're live streaming today through REB, the podcast, and my social media platforms is Spring Selling Property Collapse. Every commentator out there has got an opinion at the moment. Shane Oliver, Tim Lawless, Louis Christopher. Everyone has a view at the moment that we're about to see things get worse before they get better. Whereas I've actually seen some stabilization in the market, Phil. I've actually seen that people are sort of saying, oh, this is the new level. This is the new norm. Vendors are accepting offers. Buyers are pulling the trigger. There's actually a gun to buyers' heads at the moment. They're worried themselves that every time rates are going up, their borrowing capacity could get impacted. So there is a trigger there for buyers. But I'm just noticing that there's a bit of balancing, but the big $64 million question that every data analyst and economist is saying is, but how will this market fare up when we have the spring surge of listings? That's the real test of real estate. What do you think, Phil? Do you think we're about to see a further softening when the new listings hit spring selling season?
That's a big question. You look at the headline here, Spring Selling Property Collapse. What does a collapse mean, number one? Some information been coming over the last day or so. A lot of it really went under the radar. I think Commonwealth Bank come out and their 4 or 5 year fixed rates are starting to come down. So I think that's a clear indication of where the banks see the direction of the interest rate cycle. So they're already pricing in the fact that rates will come down at a point in time. And most commentators who I chat to and or listen to and or receive information from are talking about this inflection. That was my phone going off. This inflection rate in property, in interest rates very, very quickly. And then it's going to come back just as sharply is what people are saying. So expect further rates coming downstream, probably, and they're going to be happening in this next 2 to 3 months, which is the spring selling season. So is that going to be the handbrake on intent for Australian sellers to list their property at this point in time. I think, Tom, you got a lot closer than this to me, and I'd be interested to know what the sentiment was the 2 days you spent up on the Gold Coast with 3,000 real estate professionals, whether or not this is going to be the spring selling season that doesn't happen.
Right. So you're saying where vendors hold off from putting properties on the market?
Yep, I think this is an anomaly with the rapid increase in interest rates at this point in time. Now, there is another side to the equation, and that is the fact is people's borrowing capacity is going south as a result of rising rates. So sellers often become buyers. So that might be the one anomaly that changes it. But, to your point earlier, Tom, people don't need to sell. So if they don't need to sell, they're not going to list in an environment where they think there's going to be lackluster appetite for the properties they're selling. A lackluster appetite means negative price pressure. So I don't know if this spring's going to be a spring like we normally have this. I think it's going to be spring like we've never had before, as in, it's maybe a winter of discontent. Not too sure.
Well, as far as I'm concerned, that would be the worst result for a real estate agent, because real estate agents actually have their remuneration highly derived by turnover. Turnover is highly dictated by listings coming onto the market. So that's far more important to a real estate agent's profitability than actually price growth. You get paid pretty much the same fee whether a property sells for 300 grand more or 300 grand less. So if what you're saying is potentially a likely scenario of taking place, Phil, it's going to actually impact real estate agents negatively, because in the real estate industry, we all know that your July to December is always stronger than your January to June. And the reason why is there's such a big emphasis on the spring selling season. And so I'm not quite sure.
You can't look at the spring selling season in isolation of the interest rate environment, Tom. It's very, very different. The first time rates have gone up in, 8-9 years. The scaremongering around it, the lack of appetite for it, and the big concerns of it. You got to remember also, Tom, only a third of Australians have a mortgage, right? There is I think a third of all property in Australia is completely unencumbered. So they're operating to different rules, but the real estate sector puts all its chips on the table of the spring selling season, either side of it, July through to December. I just don't think it's going to be what it normally is. I reckon what's probably going to happen is that people will kick the can down the road by 6 months, get to a point where we know we're at the top of the interest rate cycle, which will probably be March, April of next year. And from that point in time, as soon as there's any indication that rates may start coming down, and they're talking about rates coming back maybe end of 23, start of 24, is when you're going to get an accelerated lag of all those properties that don't get listed during the spring period will come onto the market then. And that's really going to be a catalyst for your next property boom.
Look, Phil, I think the next 3-4 weeks are going to be very telling, because forward bookings for auctions are a very big indicator on what's going to happen. So before a home hits realestate.com, before a home actually hits any indication of being on the market, there's a phone call done to an auctioneer who must book a time 6 weeks ahead. So the reality is that over the next 2-3 weeks, the auctioneers are going to be able to let us know what their forward bookings look like. At the moment, Phil, I've got to actually probably suggest that you might not be far off, because when I'm looking at forward bookings and I begin on September the 3rd, hey, I've got no auctions till 11:30 that morning. Now, that is the first spring Saturday, the 3rd of September.
Super Saturday.
Well, yes, I think it is Super Saturday. I think first Saturday in spring is Super Saturday. And at the moment, I've got 1, 2, 3, 4. Wow, I've got a listing for Gavin Rubenstein. 1, 2, 3, 4, 5, 6, 7. I've got seven auctions booked, Phil. That day should be 14 auctions booked. That's Super Saturday, right? So you might be onto something here. You might be onto something. Having said that, we have had a lot of real estate agents overseas. They haven't actually been doing the pre-planning work. So we have had a lot of agents overseas. Maybe it's going to be a late spring, but hopefully it's no spring, Phil. That'd be a real worry, because I can pretty much tell you there is already a financial impact on the real estate industry, even as we speak right now. Real estate agents, and I know I've got 100 agents I'm working one-on-one with, and I'm having deep, intimate conversations with them, and they're telling me, hey, we're making less money at the moment, right? We're making less money. There's less stock. Owners don't have to sell. Buyers are being very cagey. They're out there looking, by the way. They're just not pulling the trigger as frequently as they were because of the fear of overpaying. Phil, if stock does come onto the market, I think that there will be a slightly further softening of prices. If stock doesn't come on the market, I don't think we're going to see much of a decline, because what I've seen at the moment is a settling of the market. But I do still believe, Phil, we will have a lot more listings hitting the market than what we've had in the last 3 months, right? It's been very repressed.
You look at the COVID experience, Tom, when there was so much uncertainty around what COVID would mean for Australian property. People just sat on their hands and didn't do anything. As we emerged out of that first lockdown is when property started accelerating. I think you can channel, I think there's definitely clues in that of how Australians are going to behave in this particular market as we near spring. The uncertainty, sometimes you're best off not doing anything in property. And I think for a lot of buyers, they're just going to wait and see. So kick the can down the road. I think it's going to be a very soft spring selling season in markets right across the country, because what we've spoken about, people don't need to sell. Family balance sheets are strong. People are still unsure about what's going to happen with interest rates and how high they will go. And maybe you're not out there getting bargains because you don't have a lot of distressed sellers, Tom. So why would you want to transact in this environment? Maybe I'm being a bit contrarian in regards to that, but not a lot of benefits in selling in this market, Tom.
Well, look, but the opposite to that, Phil, is where you talk about people buying and whether they should hold off. Here's the deal. You've just alerted me to the fact that I wasn't aware of it, that Commonwealth Bank has reduced its long-term fixed rates. Now, I've got to say to you, marketplaces move faster than what the people do in the marketplaces. If the market starts factoring in, hey, this is a short-term rate increase period, it's not a long-term rate increase period. And in fact, banks are clearly showing that they believe that high interest rates aren't going to be a long-term thing. If that gets factored in, what happens then is the market changes and buyers actually go out and start buying again. And what that causes is that listings get absorbed faster, and then you start seeing a slow increase in growth again. But by that stage, if you're trying to buy at the bottom of the market, you've missed the bottom of the market. So I would actually say, if you're pretty serious and keen on buying real estate, particularly if you're a principal place of residence buyer, don't try and time this one, because I think there's a possibility, Phil, you might delay for 6 months. Then what happens is we start getting the headlines, rates are going to stop going up, and there could be actually a rate starting to drop. And when that starts being the chatter, you'll actually realize, man, I missed that golden buying window opportunity. Do you know what I mean, Phil?
Yeah, I do. And I don't want to be the merchant of doom and gloom, Tom. I think we've been very considered in our commentary property during the last couple of years doing this live stream. And let's remember, as an asset class, it's still very, very strong. You'll never pick the bottom of the market. And even if you get it wrong by a couple of months either side, it just doesn't matter. It just pales into insignificance moving forward. So, the best time to buy is when you can buy. The best time to sell is when you should sell. And for many people, that's just going to force their hand, whether or not. And what's the logic, Tom? Maybe you can explain to our listeners that maybe aren't too sure of this. Why is spring always a more bumper period than winter? Is it because it's too cold? People want to get out of their houses. It's traditionally when people sell property. Why do seasons matter? Because interest rate decisions aren't seasonally dependent. How the banks price mortgages isn't seasonally dependent. So who cares about the weather?
Oh, well, it's quite simple. The answer to that, Phil, and I notice I'm getting a slow internet connection here. So just see if this builds up again. Phil, it's very simple. With real estate markets, there are milestone periods. Christmas is one of those. So what happens is your average family says, we want to be out of this house and into our new house by the end of this year. So when we start the new year, we're at a new school. We're at the beginning of a new period. So what actually drives the decision is that we begin that new period, which is normally the start of a year, in the new home. And that's the reason why you have a spring selling. The second reason why spring has always been attractive is that a home will look more attractive in spring than in winter. Trees look better, gardens look better, and homes look better. So that is another driver. And then the third thing is that generally speaking, and particularly in areas that do get colder, that people such as a buyer, they're out in bigger numbers on a warmer day than on a cold, rainy day. So they're probably the three factors, but the biggest factor is factor number one, and that is you've got all the, and that's why I reckon, Phil, it's the best time to buy a home is in December, because you've got an owner who's basically dying to get their property sold. All the buyers have left the market. Where are they? They're at Christmas parties. They've started their vacations early, or they're at Westville doing their Christmas shopping, and you've got this vendor by themselves saying, someone please buy my home. I want closure before Christmas. That's the time to be out and about.
It sounds like buy in December and buy in winter when everyone's out selling spring. Look, the logic holds weight, Tom, but we're talking about whether or not there's going to be a spring selling property collapse. Is the collapse in prices, or is the collapse in listings, or is the collapse in real estate businesses' ability to generate revenue? Is it one of them, all of them, a couple of them? If you had to prioritize them, what would they be?
Well, if you're a real estate agent, your number one priority is I need to keep hitting my gross commission income goal, which is turnover based. So what are you worried about? Man, you want a spring selling season. You don't want what you've said that is a possibility, and that is that a lot of people hold off from putting their property on the market. So what you want is people selling. If you're a vendor, man, you're going to hope that there's not a lot of people coming on the market, because you're going to do a lot better if you don't have a lot of competition there, right? And if you're a buyer, what are you hoping for? You're hoping for everyone putting their property on the market and you walking in as if you're in a Darryl Lee lollipop shop, and you're saying, what do I pick here? There's so many to choose from, right? And when there's a lot to choose from, that's when you've got prices being discounted, because vendors have to outbeat their competition. One of the ways that they outbeat them is that they actually price in a sharper way. So, Phil, I'm going to report to you next week. I'm going to speak to auctioneers during this week, because they're going to be able to give me their forward bookings for September. And that is going to tell us what does the state of affairs look like in terms of volume. I'm going to make sure that I chat to 4 or 5 of the biggest.
Do that. I reckon we need to build an index around this, because this is one really good way to telegraph what's going to happen with property, and no one's doing it yet, to actually understand forward bookings for auctioneers. So maybe that could be a new product on Real Estate Exposed, Tom, the auctioneer sentiment index, reported monthly from Tom Panos and Phil Tarrant. And to be fair, whether or not I subscribe to the idea of it being a very soft spring selling season, I'm just trying to have a counter argument to your position, Tom. I'm not sure how it will play out. However, I think it needs to be discussed, and the sentiment around it needs to be expressed, because you've got to get your business ready for it, for those real estate agents out there. Now, for mortgage brokers, Tom, refinancing is through the roof, right? So plenty of business for mortgage brokers in this particular market. And even if they're looking to extract equity to get ready for when they're going to get back into the market, and timing is everything in real estate. I know a lot of property investors out there, and even owner occupiers, getting ready for trying to pick that bottom of the market so they can strike. Who knows, Tom? You've seen many cycles, but you've probably never seen a cycle like this, no doubt.
Listen, this one is very unique, and the reason why is that the speed of increases in rates has never been at this level. Don't get me wrong, we're at a low base, I get that, but the speed, having each month 0.5%, haven't seen that in my career. And the second thing I haven't seen in my career, Phil, sorry, it's the second time I've seen it, is the speed of decline in prices. It was sharp and fast. I mean, 10% has happened in a blink of an eye, right? 10% has happened in a blink of an eye. It was only in March, we were sitting there thinking, what's going to happen? We fast forward 4 months later, man, properties that were getting 3.9 are going for 3.3. Properties that were getting 1.5 are going for 1.2. So we've absolutely seen it. The only sector that seems to be untouched and flourishing is the top end. They're just lining up. There's a lot of people that have got money, and there's a lot of people that aren't interested in getting a builder and putting in a DA and doing a renovation. They'll go off and pay someone that's already done the hard work a premium, so they don't have to get caught up in expensive building materials. They hear what's going on. They know it's hard to get a builder. They know that materials have gone through the roof. So that side of the market's going great, Phil. But I've never seen a market like drop 10 to 15% so quick. But John McGrath was talking to my real estate gym members the other day, and he brought up a beautiful slide that actually clearly showed that in Sydney and Melbourne, if you were looking at a clock, we're actually close to number 6 there. We're actually very close to the bottom, you know. And what was interesting, Phil, is that in 40 years of records being kept, most declines in real estate are picked up within 18 months to 2 years from bottom to top.
Yep.
So, man, if you're in the game and you're not a trader and you're hanging in there, you have nothing to worry about. In fact, what I would be saying, I'd probably be buying a property right now, Phil, because you might not have bought at the bottom, but you're buying near the bottom.
Yeah, buying near the bottom, and you're going to get all that uplift. That's going
Phil, on another point of before we finish off here today, I'm a referee for an application of someone that's trying to rent a property, and let me tell you, Phil, there is a real estate rental boom happening at the moment. Like, I'd heard about it, but do you realize that people are putting in applications before they see properties? They're not even worrying about negotiating. We have got a rental boom going on. We've gone from the depths of depressions in rentals, where things had a high vacancy rate, people were negotiating a reduction in rent due to COVID, and now what we've got is multiple applications going in on every property. So if you're an investor, hey mate, you might have got 5-10% loss, 15% loss on your capital growth on paper, but I tell you one thing, your rental's gone up a few $100 a week on the average property.
Yeah, well, you say rental boom. Other people would say it's a rental crisis. There's so many Australian families at the moment, they can't even find themselves a place to live, living in cars and tents and caravan parks. And it's a big problem, Tom. At one end, at the societal end, there's a lot of people really doing it tough in terms of finding housing. On the flip side, if you are a property investor or you own property, it's a positive, and for a lot of people, it's quite hard for them to have a healthy relationship with that. But yeah, it depends, Tom. It depends. Detached stuff it's hard to get a hold of in most places right across Australia, and there's a huge amount of competition for it, and it's pushing prices up. But there is also still, Tom, suburbs of apartment towers, which you drive past them and do yourself a favour. I don't know the last time you did it. Drive along the Eastern Distributor to the airport from Sydney one afternoon or evening, and see how many lights are turned on to all those apartments. A lot of them are owned by investors. The vacancy rate's still pretty high in those areas, so it's very much a two-speed market when it comes to rents. But for property investors, if if you haven't reviewed your rents recently, I'd definitely be having a look at it, because you should be able to spike them up a little bit. And we need to remember, Tom, we've got very low construction and we've got very low migration at the moment. What's going to happen when that normalizes?
Yeah, well, we're going to have another issue there, but I'm very interested, Phil, in that the suburbs that you're talking about there, heading to the airport. What suburbs are you referring to?
Oh, like Alexandria, Green Park, Waterloo,
Yeah.
those sort of high-rise belt of cookie cutter type apartments through there, which normally got a lot of students and young professionals in there, right?
Yeah, no, you got the same issues in other parts of Sydney as well. Roads is one of them. I mean, I've read numerous reports that banks are very, oops, I've read numerous reports, Phil, that banks are very, very cagey on lending money out in certain areas, supply of units. Sorry, we've come in and out there, Phil. We've come in and out.
You're
Can
right.
you
No,
hear me
mate.
now?
We've got the audio. What you're talking about there is postcode restrictions from different lenders, and it happens all the time that they don't like certain assets in certain locations, and because there's a glut of properties in those areas, and there's very little differentiating factors between them. I know a lot of property investors are quite concerned about that sort of rental market right now. That said, detached dwellings right across the capital cities and even into the sort of larger regional areas like Wollongong and the Central Coast, you can't get a hold of them, Tom. There's,
No.
you look at the data coming out, there's places in the Central Coast like Cannawall and Lake Haven and Charm Haven and Lake Macquarie and all those sort of areas where rents are through the roof. Rents are absolutely through the roof because there's more people that need them. And because of the market right now, interest rates going up, serviceability is coming down. A lot of first-home buyers were hoping to get into the market are now stopping that. They're waiting as well. They're waiting to try and time the bottom of the market. Yeah, Parramatta's another very good point as well. What's James say? Describe some of the things you say. Property has increased, not decreased. Rental market has always been demand. Market does not have much stock at the moment either. Yeah.
Well, James, no one's got a monopoly on the truth. I disagree with some of the things you said. Property has increased, not decreased. Well, unfortunately, James, you're on your own there. Every data company's got the data there to clearly show that in most parts of Australia, we have seen a decrease in value. Rental market has always been in demand. Market does not have such a stock. Yeah, well, rentals were going through a difficult period during the COVID period, but that's gone. But Phil, I'll finish off on saying on this point, I've got to say to you that I saw a wonderful 1-minute clip from the owner of Meriton, Harry Triggerboff, being interviewed on TV the other day, and he said, "Listen, things aren't great, but I'm really lucky. I've got the two best partners in the world." And they said, "Who are your business partners?" He says, "The banks and the government." When you've got the banks and the government that don't want a property market to go down, you've got the best two business partners you can rely on in business. And it's so true. Both the real estate market and
Yeah, Tom's breaking up there. Yeah, you're breaking up a bit there, Tom, but I completely agree with you. And we spoke about this as we we're going through the recent federal election. A lot of the policies coming out of both sides of the government was them putting skin in the game in terms of Australian property. If the government's got skin in the game, they're highly invested in making sure property values up. They don't want to put first-time buyers into properties where they're going to go backwards in value rather than upwards in value. And the banks are highly invested in making sure they don't get Australians into negative equity that need to sell quickly, because that just undermines the market. So I completely agree with that sentiment around the two best business partners in Australian property. If you're a property investor or even an occupier, is that you've got people who don't want property to go backwards. And some would say it's a criticism of Australian economy. If you look globally, a lot of people turn their nose up and say property here is overvalued and it doesn't fit the norms. But it's a very different market here in Australia, particularly when it comes to investment properties. There's 2.6 million investment properties in Australia. A lot of Australians live inside of them, Tom. Most of those investment properties, the lion's share of that, the property available to rent is owned by private individuals, mum and dads. Whereas you go to other parts of the world like Europe, it's owned by corporations and institutions. So it's a very, very different market here. And the government and the banks have got a lot of skin in the game. So that should help ensure the integrity of the market moving forward. Yes, it's going to come back a little bit, but one of the reasons why price growth was so rampant was the delays set as a result of COVID and some of the pent up delay in price as a result of some of the APRA intervention a few years ago. So same will happen. Go back, look for the numbers. I think John McGrath said it well in his slide there. The rebound is always there, and there's a litany of examples and case studies that show that. So hold firm, Tom.
Alrighty, gang. Thank you so much, Phil. Absolute pleasure. To our listeners and viewers, have a great week. We'll be back next week. Hopefully, give you some more insights, and I'll try and get that intel on forward bookings to see whether Phil Tarrant suggested thought of a spring season not being a hot season is accurate. We'll see over the next month, I'm sure. All right, signing off.